In our top business story, Abu Dhabi has posted its best quarter as a tourist destination, with the emirate greeting 834,771 visitors in the year's first quarter, a 32% rise from a year earlier. The greatest numbers of visitors were from within the UAE itself, followed by India. But the strongest rate of growth was from China, and that growth is expected to surge again in the current quarter. Of the Emirates' 834,771 tourists in the quarter, 30% or 260,755 were from within the UAE, a year-on-year rise of 29%. These guests had an average hotel stay of 2.31 nights. India remained the leading overseas source of tourists. It provided 50,291 guests in the quarter, a 39% increase, and they stayed for around 4 nights. After India, the next big source markets were the United Kingdom and Germany. Tourists from Britain were up 25% to 49,720, who stayed an average of 4.2 nights. Tourists from Germany rose 16% to 36,921 and averaged 4.67 nights. Arrivals from China showed the sharpest increase, shooting up 208% during the first quarter, with 32,259 visitors. But their typical stay was short at 1.5 nights. The Dubai financial market announced on Wednesday the listing of a 2.8 billion dirham sukuk for the Dubai government. According to local reports, the listing underlines the accelerating pace of efforts aimed at reinforcing Dubai's position as the capital of the Islamic economy and global sukuk centre. Dubai is the world's third largest venue for sukuk listings, and this listing raises the total value of sukuk listed on Dubai's capital markets to $20.38 billion US. The 15-year issue matures in 2029. The new issue will be over-the-counter traded and settled through Clearstream and Euroclear, not the DFM. While the listing of government debt issue has come as a boost to the total value of sukuk listed on the local market, it has improved the credibility of Dubai capital markets as an alternative to other leading international sukuk listing venues. Dubai's Global Sukuk Centre was launched in February 2013 as a part of the 46 initiatives of the Dubai Islamic Economy Strategy. Since then, a number of big-ticket sukuk issuances have been listed on the Dubai markets. UAE telecom operator Du reported a 4.8% rise in first-quarter net profit today, beating analysts' estimates as it reduced capital expenditure and revenue rose. The firm made a net profit of 490.3 million dirhams in the 3 months up to March the 31st, up from 467.9 million dirhams in the year earlier period. That's according to a bourse statement. First quarter revenue was 2.96 billion dirhams. This compares with 2.63 billion a year ago. Mobile accounted for more than half of Du's additional revenue. That rise comes despite Du's average revenue per user falling 9% year-on-year to 100 dirhams. Du's costs fell to 24.8% of first-quarter revenue from 26.6% a year ago, as sales and marketing spending dipped relative to income, and the company reduced its bad debts. Du's quarterly capital expenditure also fell by more than 2/3 to 116 million dirhams. Mobile accounted for 75.4% of Du's quarterly revenue, fixed services 17.3%, wholesale 5.9%, and broadcasting 1.4%. Data provided 28.2% of mobile service revenue. This was up from 24.6% in the prior year period. Dubai contractor Arabtec Holding plans to list a portion of its construction unit in an initial public offering on the Abu Dhabi bourse next year. That's according to local reports, quoting the group's chief executive. Arabtec, in which Abu Dhabi state fund ABBA owns a major stake, is trying to evolve from a local contractor into a multinational development company, as its finances are boosted by a recovery in Dubai's property market. CEO Hassan Ismail said that the plan was to float about 40% of the company's construction subsidiary, which he valued at 10 billion dirhams. Dubai-listed Arabtec announced plans in February to set up 5 new subsidiaries to focus on areas including new geographic markets, the real estate sector and infrastructure projects. At the shareholder meeting, the company's board scrapped previous plans for a cash dividend to shareholders for 2013 and raised its stock dividend to 40%. The company's board had earlier proposed a cash dividend of 0.1 dirham per share, plus bonus shares worth 30% of its share capital.